On the Bloomberg terminal today, talking about how junk bonds are snapping a 6-week winning streak, going back into some of the losses here for the week. We are, of course, still in conversation with Daryl Cronk, of course, of Wells Fargo Wealth and Investment Management. Want to take a quick reprieve and take a look at Katie, where I know that you have a stock for us here.
Well, of course, I'm looking at Occidental Petroleum. The late Friday afternoon news that FERC has approved that Berkshire Hathaway can buy up to 50% of Occidental. You can see what that's doing to shares, up almost 10% with just 6 minutes to go into the closing bell. What's amazing, this stock is up 138% year to date. That is quite an outperformance. But Daryl, come back in here because I want to get your thought on valuations. You know, it sounds like you're a pretty defensive guy at this moment, but if you look at some of the valuations, both on the broad index levels, the SP 500, the Nasdaq 100, those PE ratios have been coming down. They're bumping up a little bit since midsummer, but still much lower than they had been at the height of the bull market in 2020. At what point would that start to look like a bargain to you?
So it's a great point, Katie, and I think one that too many people maybe don't fully understand. The thing that's at risk there is the denominator, the E, right? So we've brought earnings estimates on the S&P from 230 down to 225, which is about a 2% decline in earnings estimates since the beginning of this year. That's not enough, in our opinion. I will take a few multiples lower on turns lower on the S&P 500. I was just looking, for example, there are places that we like in this market, energy being one of those. If you spin back a year ago, just to give you an idea, both the S&P index and the energy GIC sector were both trading at 19 times forward earnings. Today, energy has moved down by 12 multiple points, and the S&P's moved down by about a 1.5 to 2 points. So you can find places that are really attractively priced in today's market, we think, that's set up well for the next 12 months. But you've got to be more selective, and you've got to take advantage where those valuations have truly reset, like they have, for example, in energy.
I want to get your take on what is called the relentless bid, which is if you look at Vanguard and BlackRock ETFs, they just continue to take in flows. The 60-40 advisors are not shaken at all. So there is a bid coming into the market. Do you watch flows at all, and sort of what do you think of the rise of passive?
Well, the rise of passive is here to stay. There's no question about that, and I wouldn't try to fight that. I think they're great vehicles, and we use them consistently in all of our portfolios where they make sense. The point, though, is you're right, and I think the point I take away from that, Eric, candidly, is we haven't hit that capitulation moment yet where the retail investor has kind of given up and said, wow, this is a problem, which is doesn't always have to be a condition of setting in a durable low, but often is a condition of putting that durable low in. And so I think you've got people who are still buying the dips in today's markets, and I'm not sure that's the wisest thing to do right now. We think the second half of the year gets tough. There will be, again, a time where this turns, but it's probably more like year-end or first quarter next year where you're getting really good, attractive equity risk premiums, right? Today, the equity risk premium is about 200 basis points. It's not attractive. That's consistent with tops, not bottoms in markets.
Really appreciate your time, your perspective, walking us cross asset as well. Daryl Cronk, CIO of Wells Fargo Wealth and Investment Management. Eric, I come to you as we approach the closing bells. What really sticks out to you in this market?
I actually agree with everything he said. There's a suppressing force when mentally you know the Fed is coming at you. Yeah. And every time you get excited, you have to think of that, and you're like, oh, okay, well, you get bummed out.
Don't fight the Fed.
Don't fight the Fed. People have tried. It feels like over this past summer, maybe a bit of a reality check as we get towards the end of August.
We are moving closer to those closing bells. Full market coverage right here on Bloomberg. We take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are just about 2 minutes away from the end of the trading day and the trading week. Taylor Riggs, Katie Greifeld, Eric Balchunas in for Caroline Hyde, counting you down to the closing bells. And here to help take us beyond the bell in our global simulcast, we're joined by Carol Masser and Tim Stenovic, bringing together Bloomberg television, radio, and YouTube audiences worldwide to parse through some of the most crucial moments of this trading day. I think Eric Balchunas just said it best. What did you say? Buy the dip and let it rip?
No.
What?
Sell the rip?
No. Okay.
Wave at the ship? What was it?
Let me straighten this out.
Uh-oh.
Buy the dip is now sell the rip. And we see this because the SQQQ is now trading more, and you see flows go into that. So what used to be buy the dip has now turned into sell the rip. Largely speaking, again, there are weeks and days here and there where it doesn't apply, but I think that's the era we're in now.
Okay. That's another new bumper sticker, T-shirt, hat, perhaps. All right, so no doubt about it, a different tone in the trade this week, and we are going to finish just off our lows of this session. Got a few minutes left. One thing that has certainly caught my attention is the VIX, the volatility index. It has jumped the most in more than 2 weeks. It's back above 20, just up about a point today, right now at 20.46. So we know, guys, right? Tim, volatility back in the market.
Yeah, well, speaking of buying the dip and thematic ETFs, we just talked to Sylvia Jablonski, the Chief Investment Officer, CEO, and founder of Defiance ETFs. She told us that we're unlikely to go beyond those June lows that we saw anytime soon, though she could see a pullback, perhaps if we hear something from the Fed.
Well, we have one for you. We just heard from Daryl Cronk over at Wells Fargo. He made the point that this is just a bear market rally, so that's what makes a market.
Katie, we take a look at these equity markets, and it is lower here on the day to end the day and to end the week. Of course, we are awaiting a lot of some of the volatility given some of the options expiry. We've thrown around sort of a $2 trillion number, Carol, as we think about that. But just to run you through the numbers, it's a Dow under pressure by almost 300, S&P off 1.3%, and a Nasdaq that's a real underperformer here. You're off 2% as well for the day. Buy the dip, sell the rip. All right, the S&P 500, if you take a look, a little bit of a deeper look into it, 85 names in the index were higher today, 414 lower, 4 unchanged. So, Katie, definitely the sentiment was risk-off trade, no doubt about it.
Absolutely. If you look at some of the industry groups here, a lot of dipping going on. Not a lot of green on this screen behind me. You did see some love a little bit for some of those biotech and pharma names, but just 0.4% higher there. You also saw some telecom, energy, just about flat, but really there's a lot of red here, and it was the semiconductors down at the bottom, that down over 3%. Of course, semis had been the big outperformer, Carol, not so much today.
Yeah, absolutely. Not an outperformer today. But when it comes to some of the outperformers, the individual names, I found some good ones. First of all, Occidental Petroleum. You guys were talking about it. We were talking about it. This stock up almost 10% in today's session, and that has to do with Berkshire winning regulatory approval to buy as much as 50% of the stock. So Berkshire, Warren Buffett can move increasingly, if they want, pretty aggressively into this name. General Motors, also an outperformer, was up 4% at its highs today, finishing the day with about a 2.5% gain. After a 2-year hiatus, GM reinstating its dividend to 9 cents a share and also resuming its share buybacks and expanding that buyback program to $5 billion shares. So that got investors' attention. And then check out, it's been a big week, right, when it comes to the retail names. Check out Foot Locker. This stock up 20% in today's session. This is after naming retail industry veteran and ex-Ultra Beauty CEO, let me get it out, Mary Dillon is going to be its next CEO. And there were a lot of analysts really weighing in on this and really liked it. B of A and Citi both upgrading shares of Foot Locker in today's session.
And we got more retail earnings coming up next week, too. So we are not done with earnings
we're not
yet.
done.
Well, I got some decliners for you today. Bed Bath & Beyond, we got to start there, closing down 41%. This is the biggest drop on record. We all know why it happened. Filing hit showing that Ryan Cohen is just out of there, done with Bed Bath & Beyond, made nearly $70 million on his investment in just a few months. Also keep an eye on Wayfair. Shares closing down 20% after the company said it's going to cut about 870 employees, this to save costs amid what it refers to as a slowing economy. The move represents about 5% of its global workforce and around 10% of the corporate team, the company said in a filing today. Also making, quote, substantial reductions in third-party labor costs. And Robinhood finishing the day down by 9%. It fell after analysts pointed to a drop in July trading activity and a decrease in user engagement after the platform said it saw a 6% slump month over month in its active users, Taylor.
You see yields here, of course, Tim, as we continue to go cross-asset on this closing bell Friday, really moving higher. And I think this really sets us up nicely, Carol. So you think about Jackson Hole and some big Fed speak next week. You're climbing 4 basis points back up to 324 on the 2-year and climbing about 7 to 9 basis points further out on the curve. A 10-year, 297 as we rethink about what a 3% on the 10-year really means, and also climbing on the 20-year. I think this was the week when we had a decent Tips auction, I think, coming out on the long end, maybe on the 30-year. So interesting when we think about some of the long end demand, some of the foreign buyers, et cetera. So all of this yield focus really front and center.
I'm sorry, Taylor, but I'm just thinking about next Friday already.
Oh, Carol, look, New Jersey outlook to positive from stable to S&P. You're the Jersey girl. Look at that. Great news.
Yeah, that's because we're all paying more and more taxes. Of course, it's more stable. There's more income coming in. I am thinking about what we get from Jay Powell next Friday. We also have a bunch of economic news ahead of that new home sales, durable goods, but also on that Friday, we're going to get a read on personal income and spending. We'll get PCE deflator, so we'll get some inflationary numbers. So I do wonder, Katie, how Jay Powell and company is going to kind of roll it up into what kind of message for investors for the world, basically.
I am so excited. I mean, the next Friday is going to be such a fun macro event. And when you think about really, obviously, the bloom coming off the rose a little bit when it comes to the equity market, this bear market rally perhaps that we've been in, but still financial conditions have eased meaningfully, even as the Fed continues to hike, continues to beat that drum that they're going to stay hawkish. It feels like Powell has to address it. I don't know what else he would talk about.